A very, very strong weekly close for the crypto market. You can see over here on the crypto bubbles chart, it is still a massive sea of green. Definitely refreshing to see a little bit of green back in the market, a little bit of buying interest. But the question that I'm sure many of you have is, will there be a pullback? And also, is this a massive, massive bull trap? Well, we'll find out in 20 minutes or less. Let's get started. I'm going to get straight into the show. And I wanted to start off with this tweet over here by Miru, just covering the important economic events of this week or important days. Firstly, this week on Monday, so US stock market holiday, therefore it is going to be closed. Tuesdays, FOMC members will be speaking. Wednesday, we got US PPI report for December. FOMC members speaks, Fed speaks, and then Thursday we have the US is continuing their jobless claims. You would want to see those numbers come down because that is obviously a healthy sign that we would not be going into recession. So that's an important thing to look at. Fed speaks again, FOMC member speaks. Friday, FOMC member speaks and Fed speaks. So a lot of talks from the Fed and the FOMC members. Okay, Bitcoin on a monthly chart over here using the Heikenhashi candles. You can see pretty self-explanatory. The yellow circles typically are the bear markets, and then the green is the accumulation phase. So just to give you a little bit of perspective of where you're sitting within the cycle and why you should not have FOMO of a V-shaped recovery where price is going to, let me just get that away, where price is going to run away from you like this. It's very, very unlikely that that is going to happen in one go because it's never happened before. If you look, every single time we go down first and then we have a bit of sideways. Then we go down and then we go sideways. Down, sideways. And then here we are down. Expectation is the range would form within this green box. We have not hit deep into that green box yet, but we've just touched onto it. So I'm going to quickly zoom in over there. So it's possible that we'll oscillate around this area for a couple of months. And I just wanted to encourage you guys. Most people out there would have missed the pump. So why you should not have FOMO with regard to this market and wait for high time frame confirmations. We're going to go over those levels right now as well. But first, I wanted to outline one valuable piece of information over here, and one encouraging thing as well for the long-term health of Bitcoin is the RSI is reclaiming back again above that all-important 43.53 level on the monthly chart. We want to see this break above the yellow moving average and hold there. So you need a posture like this whereby price regathers back above that, and this slowly starts to turn around like that. That would create a picture whereby you would have your sideways period of consolidation that would match up with this and then reaccumulate, and then we can continue on into a new run. So that's kind of what I'm watching. That is for the very, very high time frame guys over there. Monthly order block still could potentially be hit. The monthly order block is, of course, much, much lower. But at this point, let's just get that back. Where did it go to? Hold on. All right, guys, I seem to have completely lost everything there. I'll have to come back to that chart. I don't know what happened there. Okay, weekly chart over here as well. The RSI has broken its downtrending resistance line, which is a positive sign. The yellow moving average has reclaimed as well. So that tells you that there is the possibility for momentum to really kick back into the market and for some decent upside to come into play. It could look like a massive deviation on the high time frame. I'm going to show you the exact levels on the next chart. But looking at this chart over here, you can see this was enough momentum to break through all of those moving averages. So very strong weekly candle close. And when you look at the previous week's candle, that can give you some indication of what to expect next. And based off of what the information that we have over here, when you see such a strong green weekly candle close, you should expect continuation in the next week to come, which is this week. I will cover the trap levels as well in case it is a major bull trap. So here it is again. The next candle, if this one can start to break above the Bollinger Bands over here and expand out of that, I would be much more confident. This week is going to be a very, very important week because I think we'll have our confirmation of how long this rally could potentially last, or whether it's going to be a bull trap. We should find out within the course of this week. And I showed this chart on the previous show that I did, and it still pretty much needs to break this level over here. So very, very easy to see. If you just look at this zone over here, you have lower high, lower high. Now you want to see a break of that structure to form a higher high. How high this goes, I don't know, but I'm interested in the next higher low that forms after that zone. That is where I start to look to buy the dip. So this could potentially break up all the way to about possibly even, who knows, 25K, 23K, somewhere around there. And then I would expect a rejection and a pullback. And also this might not go as deep as what's shown over here. I'm just illustrating the price structure. It may come as a shallow retest back into the 20K region and then bounce off of that zone. That is essentially what I'm trying to show here. So at the moment, the high time frame bullish structure has not yet been broken. I do want to make that clear. It has not been broken. You can see it very, very clearly over here. If you look at this chart over here, we need to see a close. So it's equal highs at the moment in relation to the lower high that was set over here. The current weekly close is at exactly the same level. So we do not have actual confirmation yet. Waiting for closing candles is much more important than looking at wicks if you do want to be more conservative and safe with your entries. Okay, so I think I want to show this tweet over here because I know that Crypto Nova, he has a similar view to me. He's always viewing things in a similar fashion with a couple of his mentions and tweets over here. So he says, BTC Sunday update. Let's keep it nice and short. This is what I see in the weekly time frame. There are no fireworks yet, but if we do break above this level and close above it, then I'll let you shoot the first fireworks. That level is the level that I just showed you on the previous shot over there. And then he says, but is this mega pump about to retrace? So here you go. You have it over there. Nothing bullish unless we start to close above this first level. Then he goes on to show here, let's look at the different data. The open interest gives us information about where people have open positions. The market wants to have as many open positions as possible to bring liquidity. Remember, these markets are purely driven by liquidity. So they will visit and consolidate in the areas with open interest gaps to trigger retail orders. So retail traders typically tend to chase these pumps. And as per high block capital over here, if you do zoom in, you can see a bunch of open interest gaps pretty much formed between just above 17,500 to 18,000 is the one. The other one is at 18,500. The other one's at 19,500. And then the next one is between 20,000 and 20,500 over there. Okay, so moving on, he says there's also a CME gap that's at 19.9 thousand. And he says my analysis is based on the most probable scenario according to the data I know. And the CME gaps tend to fill. That's why I'm adding this chart to the thread. CME gaps are statistically filled most of the time 1 to 2 weeks after they've been created, which is why I told you on the last show that I did that you have approximately 2 weeks in which you're going to have to make a decision of whether you want to enter into the market. So if we break high time frame structure and we make a higher high, then you're looking to purchase that pullback, which could come into this zone over here between that 19,500 and 19,900 zone. So he says, short liquidations have driven this pump this far. Most traders expected a rejection around the 17,600 and the 18,600 level, and then they went short. So the market pushed all the way through to $21,000 aggressively, liquidating them. Of course, a short squeeze. So he said this is a game of fuckery, excuse my language, and sadly, the market will try to hunt you all the time. It looks for liquidity. It wants to liquidate people. It's driven by algorithms and big players, and this is the way they play the game. What are the current liquidation levels? Well, in 3 months time frame, we have this. This is why we can't still disregard or discard the bearish scenario. As I already mentioned, we're still in a downtrend. We haven't broken any bearish structure yet, so there's no reason to feel FOMO. So I hope that also helps with your FOMO gauge. Here's the low levels. We got major liquidity lying just below 14K, then at about $15,700. And then now we have a new one that's busy building and developing based off of the longs. Remember, longs, if you go long, you have a liquidation level as well. The shorts, that's going to be at 22K because people are starting to build short positions already at these zones. Okay, moving on. Let's finish this one off. So he says on the 7-day time frame, we have some liquidations at 21,700. This could create a false move to push price to those liquidations and also a deviation in the weekly chart. And then he just says he favors shorts for now. The retrace must come soon. So that's what he's looking at. I am looking at a couple of similar things, but in actual fact, I would not be looking to short aggressively, maybe small shorts. I would more be looking to position myself in longs on any pullbacks. And I'm going to show you why pretty much right now. So here we have the chart that I've shown before, psychology of a Wall Street cheat sheet. You go through all the different phases. We still haven't really had any real capitulation phase, and depression could still come at a later phase too. So be cognizant and aware of that. It's not to say that it's going to follow this trajectory or path. This was just a chart that I made back in November. But what I do want to highlight over here is simply the ranges. So I told you guys that pretty much Bitcoin has operated within 3 main ranges. At the top here for the good part of a year, it was range 1. Then we spent very, very little time over here in range 2. That's the only time spent in range 2. And then we spend this time over here in range 2 as well. So what may be happening is this could be a deviation back into the range. And as long as you're holding that range, what's labeled as range high here, but if you viewing this as range 2, then this is the range high of range 2, the range low of range 2, and the mid-range of range 2. Any dip or pullback into that range low, I would be looking to purchase. So like this, if you see that first we need to make the high, right? Which I assume we're going to make this week. Any pullback into that zone, if it holds above that level, I'm looking to bid that back into the mid-range and then potentially even towards the range high, which would create the opportunity for a much greater relief rally coming all the way into this underside resistance over here. All of this needs to be retested. It hasn't properly been tested since the major breakdown that happened back in May, and then we led into those lows in June, and then obviously the rest is history since then. But a break of this trend line already shows that there is a momentum shift in the market. And you want to pivot yourself, right? You want to pivot yourself. You don't want to be stuck on the sidelines and watch this thing rally all the way to 30K. At that point, you never know. Maybe quantitative easing comes back into play. The Fed completely stop their raising of rates, and then potentially Bitcoin and all risk on assets catch a bid. So this is just kind of the way that I'm thinking about the market at the moment. The biggest thing I'm paying attention to is this as a potential deviation. Nothing is confirmed though until we break above this level. We need a high time frame close above that zone, and I'll show you on the low time frames how you can potentially time something like that. Okay, and that's not to say that we're never coming back down to these levels. By the way, I've already seen a massive assortium of tweets from influential people claiming that we're going to $300,000 Bitcoin again. Just absolutely insane numbers that haven't heard since the bull market. So be cognizant of that. Okay, I wanted to touch on another thing. We do have an absolutely awesome initiative at the moment. We are giving away a Rolex. So I do have it here in the flesh. I'm going to quickly open it up over here. It's all in a green box. Oh, you can't see it. It's a green screen. Okay, let me get this out and show you what you have the opportunity to win. Okay, so it's I think it's called the Submariner Rolex over here. There we go. Is that working? There we go. Pause it over there. That's the watch for you over there. It's a Rolex. It's valued at more than what some people's vehicles or cars are worth. All you need to do to enter is click on the link below. There's in the description. Go into the description of this YouTube video. ByBit over there. You can win the gold and blue watch over there. Just click that below. Sign up to my link. I would really, really appreciate it. It helps me quite a bit when I do get clicks on that. Of course, we are sponsored by these exchanges. So if you are going to be trading anywhere, consider using my link over there. That gets you automatic entry into the competition, and then we'll be giving it away in the month of February. You do need to take a trade, so deposit money into that account, take a trade. It doesn't matter if you're trading spot, so you can quickly just buy and sell something. You can take a leverage trade, margin trade. It doesn't matter what you're doing, but just take one trade. Each trade is an entry, and then go to the Discord group as well and join there. There's so much alpha. Once you've signed up on my link, that also gets you access into the VIP group, which is where I drop my thoughts and my trades whenever I take them. Okay, so that's ByBit over there. Great exchange, high liquidity, fast. I pretty much, that's my main exchange that I use, that and Bitget. Okay, moving on to the analysis over here. The DXY, the dollar index. Now, we are coming into an absolutely important zone, which is another reason why you should not FOMO into the market yet. Do you see the orange line that I have placed over here? That is pretty much coming from the level that was put in on the 30th of May 2022, the low that DXY put there before it started to go off into a major rally. There is where liquidity lies. That's going to be an area of interest. And then I do have the broader range, which is the major support, which comes in from many, many years back. This has been a super, super important area. And this could just be a retest of that zone. And then a bounce from that level would, of course, be difficult for equities as well as crypto to rally in that environment. Typically speaking, they're not always inversely correlated, but when the DXY rallies, typically stocks and crypto do come down. For anybody that may be new here, that is something you want to be cognizant of. And percentage-wise, if you do look at this at the moment, it could already reverse from where we're currently at, but going down to that level, it's only another 0.84% away before it hits that liquidity zone, which is at 101.297. So if you do want to write that down, 101.297, you should expect that after a massive move to the downside like this, eventually there will be some sort of a bounce from that level and a reaction to the upside. And then you're hoping that it's going to set in a low high. And at the same time, that would give you the opportunity to make your entry into crypto. That is, of course, if the market really is reversing. Okay, moving on. Here you got Holger. Holger says that global stocks have gained 3.3 trillion in market cap this week, thanks to growing evidence of a soft landing or a mild recession economic scenario. And he says, characterized by cooling inflation, non-recessionary growth, and reduced monetary tightening overhang, all stocks are now worth 103 trillion, which is equal to 106% of global GDP. So what that typically means is essentially people are, the market is always forward looking and they're front running this, which is why the stock market rallied, which is also part of the reason why, of course, crypto rallied, just with a higher magnitude. But if you look at Andreas Steno Larsen, he says here that our weighted average of forward looking indicators hints of a more than 50% probability, which is pretty high, of a recession beginning in Q3 of this year. The recession probability in the first half of 2023 remains very low. That is in sharp contrast to consensus among investment bank strategists. So what I want to mention about this over here is a lot of people are not expecting a recession in the first 2 quarters of this year. If they come out and they announce that we are in a recession within the first 2 quarters of this year, that would be pretty catastrophic because it's not priced in. So you do want to pay attention to what's going on from a macro perspective. This is how it can tie in with your trading. Control your risk, and you're not out of the woods until we get out of the first 2 quarters, is essentially what I want to say. Crypto is not in the safe zone until we escape the first 2 quarters, simply for the reason that if they announce a recession coming sooner than we expect, it's probably going to be quite an aggressive recession and not a mild recession as has been suggested over here. Price-wise, what is going on over here? Okay, so we have the S&P 500 futures chart. We have the orange, range high, range low. Mid-range is this blue box over here, which we've kind of reacted off. That also lines up with the 0.382 fib retracement level taken from the all-time or the COVID lows in the stock market all the way to the highs. Typically, we move all the way down to the 0.618 to reset the market. That brings price down to 3,180. So still don't rule this out. Don't rule this out as of yet. Okay, where are we within this structure? So downward channel, rejection, rejection, rejection. Now at the moment, you were left with this massive wick. So I put here 100% of the wick, and then you got 50% of the wick. Now I'm looking for areas of interest of where this could potentially turn. I've just shown you that the DXY is coming into support. DXY bouncing with the stock market coming into a key level could mean that this is where the pullback would take place. So what would it look like? Something like this. I marked off, so measuring the wick from the top to the bottom over here, you get the 50% of the wick. That would be this level over here, which also comes into the range high. So I would be looking for weakness within the stock market anywhere around there where it could potentially turn over. What that means for you and your crypto is you probably want to consider tightening your stop losses on longs and potentially even taking profits when the stock market comes into this zone. This zone being anywhere between 4,074 and 4,000, let's just click on that, 103. So 4,074, 4,103. Those are the levels that you need to watch. That's the zone that I'm focusing on where I do anticipate that a potential rejection could take place. Okay, Bitcoin on the 4-day chart using the different the moving averages that we use. Firstly, we cracked through this important area of resistance. This whole zone over here was quite a strong area of resistance, but due to the sheer power of this move and the volume that kicked in, it managed to break through in pretty much 8 days. So just over the course of a week, we broke through that zone. Any price action that holds above this zone, this is going to flip into new support. So previous resistance is going to flip into support, and I would be looking to pretty much capitalize, taking longs, defending the high lows. The high lows would be over here. So any price action into this zone over here, I'm looking to go long with my stops obviously below the lows. Now that doesn't mean you can take your whole account and go on a leverage trade, because if you do, you're going to get absolutely wrecked. Of course, you need to control your risk, right? So let's say you enter around here, then you're looking at still a 19% move before you take out the new lows, and you're completely wrong. So that is too much of a drawdown. You obviously can't enter in with your whole account. You need to calculate if price moved 20% against you, how much money can you use, where if that trade went 20% against you, you only lose 2%, the typical 2 to 3% in a crypto trade, meaning that it's probably 10 times less, because 10 times less, 20% is 2%. So keep that in mind over there. But so far, it's looking promising. Prices holding above the moving averages. All these moving averages will have a chance to posture back up. And you want to see the short above the medium, above the long term. All of them angled upwards with price holding above those levels. That creates the environment for a strong trending move, in the same way that towards the downside over here, you had price stuck below the short, below the medium, below the long-term moving average, with all of those angled down, and that created a very strong downtrending move. So we're hoping for a proper reversal within the markets. Now, what would that look like from a pretty much the falling wedge and the Wyckoff accumulation patterns that I have given you? I'm going to show you that in a moment, but Kevin Svensson over here shows this chart. You got the break of the falling wedge. I warned you guys, I said a lot of people are going to go ballistic when they see this falling wedge break, but that's where you also want to be extra cautious in case it is a major bull trap. Now, you can also view it as an inverse head and shoulders, meaning you're moving through the wedge, you form the left shoulder, bounce back up, that creates your neckline, come all the way down to the bottom, that would be the lows, which is your head, bounce back up, you break that, you break the pattern over here, the falling wedge, and then that retests the neckline, one more downswing into the right shoulder, and then that gives you the opportunity to pretty much go long. This would be your ideal long going into the right shoulder, which is your next higher low, and then smash up and break through that zone. That is, of course, the bullish hopium case. So Here you got the Wyckoff accumulation pattern, and so far it is playing out. So this is what it would look like. So far it's gone a little bit more extended than what I would have anticipated initially, but nevertheless, you should still be looking for a pullback. So exactly like he showed over here, and then you would form your right shoulder. That's anywhere around that $18,000-$19,000 level. So this move's moving up quicker than I thought. So you're probably going to have to raise your targets. It's going to be anywhere around 18.5, excuse me, to 19.5 is where I would start to look for that higher low to form. What you want to see is you want to see price come down very quickly and then bounce out of that area, signifying that there is a lot of demand and sideline money that is waiting to jump back into the market. In other news, here you have the Bitcoin hash ribbons, which have flashed a buy signal for the first time in a very, very long time. So another positive from the miners. Will Clemente has shown that this has now been confirmed by a bullish cross from the hash ribbons, and miners have stopped selling, and they're now plugging in their machines at a sufficient enough rate to declare this period of miner capitulation over. So for the time being, miner capitulation does appear to be over. If you do want this chart, it's hash ribbons by Capriole Investments. Put that into your indicators over here. You'll find it on Bitcoin and put it on the daily chart. The blue over here flashing is the buy signal. At the end of the day, you still want a pullback before you do go long. Okay, Tyler mentioned a while over here, and he says, regardless of the recent price action, do not underestimate the strength of PTSD, post-traumatic stress syndrome. This move out of the bottom, which is back in 2019, I'm going to click on this to zoom in. He said it wiped out so many excellent traders. It completely zeroed them due to their mindset being a bear for a year, comfortable shorting and thinking it has to dip soon. It always does. So what he's saying is that price can very quickly run away from you. The difference is that back in 2019, the crypto market was probably 10 times smaller, so less liquidity, which means smaller market participants with buy orders could move the entire market. This pump, I remember it clearly, was led by the President Chai of China, saying something positive about Bitcoin and crypto, and the rally proceeded. Of course, it got fully retraced back into the COVID dip over there. But nevertheless, this would have been the start of the new bull run. Had COVID not happened, this probably would have been the start of the new bull run. So if we are in a similar environment, you do want to shift and position your mindset away very quickly from if you were super, super bearish, looking for 10 to 12K. As I was looking for strong horizontal levels, but I see myself as a trader. I'm willing to move with the ebbs and flows of the market and pivot if need be. Inverted chart, still waiting to take out that zone to form a lower low, which, because it's inverted, would of course show a sign of strength. Now, coins to look at going into the next run. If this were to continue, I really want to start to position and pivot myself into thinking about what I might be interested in. James Bull says, okay, the 5 hottest narratives for 2023 and their strongest contenders are going to be layer ones. He lists them over here. Enterprise is going to be the next one. AI, because we do know everything going on with this chat GBT. Perp dexes, because of the centralized exchanges obviously having holes in their balance sheet and not having the actual collateral they said. And then 5, self-custody. So keep an eye on that. You're welcome to take a screenshot of that. These are some of the coins that are in the portfolio list, of which I wanted to very, very quickly go through. This is going to be rapid. I am running out of time over here, but I just wanted to look at all the price action over here. Pretty much very simply put, ask yourself on these coins from the portfolio list, have we taken out the previous lower highs? No. Ethereum, we have not. Dogecoin, no, we have not. Here we got the Optimism. Yes, Optimism is beginning in a massive uptrend. Wait for a impulsive move to the downside, an opportunity to get long. Curve, no higher high yet. DYDX, no, but stuck within the range. I gave this in the daily candle newsletter. Deviation, straight back up, target mid-range, then target range high. Arweave, same thing, working out perfectly to plan. I gave this in the daily candle newsletter. This is also in the Discord. Another reason to sign up to ByBit or Bitget. You get into the Discord. This is where I drop this stuff. Potential deviation in play. Drew this weeks ago. Still following exact. Looking for the pullback into the critical level, bounce target 1, target 2. Chain link also, I gave you potential accumulation zone. It wicked directly into that. We're almost already back at mid-range, but is it a trending market or consolidating? It's consolidating. We have not made higher highs yet. Uniswap, taken out this zone over here, but still consolidating. I would be more interested to see it get above this level first. Solana, despite the behemoth move that Solana's had over here, it is still yet to take out its, there you go, higher high. So also outlined deviation straight to mid-range, and then next target to range high. Potentially you can take out that zone. Okay, guys, I'm going to stop on that one. I am running out of time. Very, very quickly, I also wanted to mention over here, Bitcoin on the daily. This is starting to turn over the Fisher distance from EMA. You can see it's reached, by the way, the highest level that it's ever reached. I marked that out with a red line, 6.05, starting to turn back down. If this starts to roll over and we left with a big daily candle with a strong wick and then a red move to the downside, that's where you want to start to pay attention. Is it going to be a higher low, or is it going to be a bull trap? Anything under about 19,000 starts to look like a major bull trap for me. Okay, you want to hold above the moving averages. The blue is the 200, the white is the 100. Eventually, these will start to compress into each other. This is on a daily, and cross towards the upside. Typically, price pulls back into those crosses. That's at 19,300 right now if it followed that trajectory, and that is your opportunity if you do want to go long, to get long off of a high low. Okay, holding above the moving averages over there. Super Guppy will have a chance to turn green. Still gray, needs to move a little bit higher and then pull back, and that will turn green. Cause for concern, let's just refresh that, is the GMX dashboard over here. You have the long to short ratio pretty much at about a 1:5. At one stage, it was 20 million versus 130, which is about a 1:6. Okay, main range that price is formed within on the 4-hour chart over here. Let's just quickly make this a bit bigger. Okay, I'm going to read this out very quick because I'm running out of time. There we have the range high is 24,735. It's denoted by the blue over there. Range low, 18,520. Mid-range is coming in exactly in the middle, 21,543. What I'm looking for, we're currently pushing into the mid-range over there. I'm looking for a probably over under scenario. Maybe we squeeze a little bit higher to 22, and then I'm looking for a pullback. The pullback is where I'm looking to get into the market around that 19,300 level, which happens to meet up just around that 50 exponential moving average. I don't want to see price get below as this 200 starts to move up. If price gets back below that level, big bull trap, and then look out below. Okay. Exit pump shows you BTC spot versus cumulative volume deltas. The whole move from 17,000 to 21K was made by someone on Binance aggressively buying Bitcoin, and they were using BUSD to do that. Other exchanges started to buy around 19.5 with USDT and USDC, and the green cumulative volume delta includes all of the exchanges with Binance, USDT, as well. The yellow is only for BUSD. So you can see BUSD, the stable coin on Binance, is pretty much what they use as leverage to drive this entire market up, which is all the more reason why it could potentially be a trap. You want to be very, very careful, but sometimes market makers can push price up to try and offload their spot, but that can still create a cascade which will lead into market participants front running and FOMOing into the market, and that can actually still end up reversing the market. So that is kind of what I'm seeing over here is the leverage traders, yes, they push the market up. The spot traders followed suit, which is a healthy sign. You want to see spot coming into the market. And then the open interest has dropped back down very quickly on the 15-minute chart. And then if you look over here at what TED Talk says, he says, while I think that the market is ready for 2 to 3 weeks of upside, late longs piling in after big moves is going to be a theme along the way. Wait for the flush. Funding resets, price can go higher. Negative funding at the highs often fuel for more upside. We're not in negative funding yet, but wait for the funding to reset. Okay, and this has been the story of Bitcoin over here. We broke into the range, creates a bull flag up, bull flag up. Then we had a little bit of a triangle. First, it was looking like a flag triangle. I bid this one over here, got up, and then we went into a pennant over here. So triangular pennant, looking again for one more upside move. I'm giving you very quickly because I'm out of time, guys. The pullback zones that I'm watching. Mark this on your chart. This is low time frame. I'm on the hourly. I'm looking for deviations above these zones. If it doesn't hold above that, that's the area where I would take a very quick short trade. If it does hold above that area, then I'm looking at the next zone. What are those areas? The first one I've labeled as the pullback zone, $21,473. Second one, $22,799. That's it. Okay, guys, please check out Bitget as well. I outlined the grid strategy that orders were set between 16K and 12K for your spot positions. Obviously, you were filled on $500 range over there, 16K down to 15.5. Consider taking profits on that grid trading strategy. Next, Rolex. We have another Rolex. I put some of my own hard-earned money into purchasing this Rolex for you guys alongside Ran and Sheldon. We just want to give back to the community. This is a beautiful black Submariner, very, very similar to this one. It's just black. That's the only difference. All you need to do for this one, this is the Bitget one. Click on the link below. There we go. Let's just quickly go there. Please do me a massive favor, give the video a like, hit the bell notification, and also subscribe to the channel. And then if you look here below, Bitget, all the details are below. Enter both competitions, same thing. You will need to take a trade. And that is it from me, folks. Very, very quick. I have run out of time, but I appreciate all of you immensely. Thank you so much for watching. Do not have FOMO. You have plenty of time to get into the market. Have an absolutely legendary, stellar day, and I'll see you all tomorrow. Cheers for now.